What's up, Elon holders? Welcome back. I'm doing another update on the Dogelon Mars token. We know that as none other than ticker symbol Elon. Gotta let you know I'm not a financial advisor. Never WhatsApp anybody in my comments and never give anybody your seed phrase. Also, do drop a big like on this video. It's going to help get exposure on the Dogelon Mars project, the Dogelon Mars mission, and most importantly, the Dogelon Mars community. Also, do consider subscribing, as it will keep you up to date on cryptocurrency news, all things Dogelon Mars, and you can even win yourself some NFTs in the process. I do giveaways pretty often on my channel. All you got to do is be subscribed, drop a comment below, and you will be entered. So let's get into the day, shall we? It does look like we are currently ranked 158 right now. 602566 is our current price tag. Market cap sitting at about $140 million right now, while just about $3 million have been traded over the last 24 hours, which is up about just under 20% as well. Very great to see. Market confidence is high as usual. Great to see that the confidence is high among consumers, as well as our holder count does continue to increase. We are sitting at the 140,280 holder mark. All right, this seems to be getting some momentum. That is awesome to see. What else is awesome to see is that we are scoring back in that top half again in the short term. I will refresh that so you know it's an up-to-date score. It looks like a 77 is now what we are scoring, but is still more bullish than 77% of cryptocurrencies in the long term and 63% of cryptos in the short term. So very awesome. For volatility, sitting about a 34, and sentiment is getting more bullish as time goes on. Risk is sitting about in the middle, but overall crypto sentiment is bullish, and we are up just under 1% in the overall crypto market. Very awesome stuff. I mean, despite everything going on right now, we do have some nice price predictions as well. It does look like 60295 in the next month, 2915, 608685. Wow, in the next 3 months. And then they are getting a prediction of 502 in the next 6 months. And they do expect it to cool from there into the 501674 in the next year. So I'm definitely going to be keeping track of these predictions and seeing how accurate these are. But very nice to see nonetheless. Looking at an article, Robert Kiyosaki did say end of fake money is here, shares 3 lessons to help investors amid market crash. Now this is pretty epic information, as Robert Kiyosaki has been known to be adverse to cryptocurrency, but he has since changed his mind, and it does look like after predicting the biggest crash in world history, Robert Kiyosaki, the famous author of the best-selling book Rich Dad Poor Dad, said the end is near for fake money. He reiterated 3 lessons that will help investors do well in market crashes. So the author Rich Dad Poor Dad, Robert Kiyosaki, shared some of his views and investment lessons in a couple of tweets this week. Rich Dad Poor Dad is a 1997 book co-authored by Kiyosaki and Sharon Lecher, who has been the New York Times bestsellers list for over 6 years. More than 32 million copies of the book has been sold over 51 languages across more than 109 countries. Kiyosaki tweeted on Tuesday explaining why he thinks the end of fake money has arrived. The famous author wrote, "And is here, called Jerry Williams, my trusted gold and silver dealer. He said, I can't get gold or silver coins. The mill will not sell me anymore. To me, this means that the end of fake money is here." He proceeded to reiterate his silver recommendation as stated in an earlier tweet. "Silver going to 100 to 500. Get some, protect yourself," he wrote. His advice followed another statement he made recently that gold is expensive, calling silver the best investment value today. Kiyosaki previously explained that when President Richard Nixon removed the US dollar from the gold standard in 1971, the US dollar became fake money. He clarified that this is because rather than being tied to real money such as gold, it was tied to full faith and credit of the United States. In a tweet on Thursday, the renowned author reminded investors of some lessons in Rich Dad Poor Dad. I stated Rich Dad's three lessons he described, elaborating: your house is not an asset, savers are losers, and the rich do not work for money. The rich are entrepreneurs who do not need a job, he added, noting that these people create jobs, create their own assets, and do well in market crashes. He then emphasized that in 2022 is your time to get richer. Last week, Kiyosaki urged people to invest in real money, naming gold, silver, and Bitcoin. He stressed that the Federal Reserve raising the interest rates will destroy the U.S. economy. Kiyosaki has reportedly warned the biggest crash in the world is coming. In April, he said all markets are crashing. He recently urged his mailing list subscribers to buy cryptocurrency now ahead of the biggest crash in world history. This famous author has stated for several months that he is waiting for the price of cryptocurrencies to bottom out before getting in. He recently said he is in a cash position waiting to buy BTC, suggesting at one point the price could reach $1,100. Wow. I don't know about that. I mean, I don't really see it getting that far, but I mean, you never know in these times that we are having. Does it look like that he is not too far from the truth here, as crypto on pace to outperform the S&P 500 for quarter three. It does look like we do have a few days remaining, but it does look like crypto is on pace to outperform the market. After plummeting in value the second quarter, cryptocurrencies in aggregate are holding out better than the S&P 500 index and bonds, and remain on par with the NASDAQ from July 1st to final week of the third quarter. Chaos in fiat currencies is starting to make crypto look more attractive, Owanda senior market analyst Edward Moya said on Monday. Note, Bitcoin's modest weakness is rather impressive given the panic selling occurring across a wide range of risky assets, swinging between a high of as much as 1.18 trillion and a low of 871 billion for the period. The total market capitalization for crypto assets currently sits at 931 billion as of Monday morning, according to CMC. Currently trading around 19,000 per coin, the largest cryptocurrency is little changed, minus 1% at the start of the third quarter final week. The quarterly performance follows worse crypto losses compared with other asset classes for the first half of the year, stemming not only from the inflation fears and central bank decision making, but also a high degree of leverage and poor risk compliance from a number of major crypto firms. Hours after the Federal Reserve said it would hike interest rates by another 75 basis points last Wednesday, Bitcoin briefly fell as much as 6.8% to the 18,290, its lowest level since June. But over the last 5 days, it's gained 2%, down 1% since July 1st. For the same period, the NASDAQ Composite, which has shown only half the loss of value of Bitcoin for so far this year, has sold off 0.5% and trades below 1.8% its July 1 value. The monthly inflation data report and monetary policy events such as the Fed action last week has heightened the correlation between crypto and equities. The effect can be seen in the 30-day correlation between the ETH fresh off the rally leading up to its merge upgrade, and QQQ, a popular ETF that tracks the NASDAQ 100, according to the fund digital asset strategist Sean Farrell in a Friday note. The second largest cryptocurrency, Ether, is changing hands above $1,300, up more than 3% from the $1,263 per coin over the last 5 days, an increase of more than 25% for Q3 so far. Because crypto is largely higher risk than stocks, it often reaches near-term bottoms and peaks first, Farrell said. This relative strength could signify that we could see a rally of sorts for stocks starting in the next couple weeks, Farrell said. The S&P 500 looks slightly worse since July 1st, falling more than 3%, but year to date it's performing better than crypto and the NASDAQ. Global bond markets also felt selling pressures this quarter. On Friday, the Bank of America strategist said worldwide government bond markets are on pace for the worst year since 1949. Both other currencies and risk assets are losing value against the U.S. dollar, with Yahoo Finance U.S. dollar index up 3.5% in the last 5 days and up nearly 8.5% since the beginning of July. At very least, crypto's term performance speaks to the lack of leverage in the market compared with the first half of 2022, according to Farrell. It is not unreasonable to speculate that if we have experienced the price action we saw with the past 2 weeks and back in Q1 and Q2, there will be cascading liquidations throughout the crypto market, exacerbating any drawdowns, he said. Looking ahead, crypto market watchers should be mindful of Friday, when end of month and end of quarter options expire, according to the crypto prime broker Genesis. The telltale moment may not prove as notable for Bitcoin, according to the crypto option aggregator CoinGlass. Open interest for Bitcoin options contract has increased 4.2 billion to the 5.2 billion since the third quarter start, yet still have a rough half the levels seen in the first and second quarters. On the other hand, Ether options open interest has risen by 3.8 billion to the 6.59 billion, a level not seen since 2021. Despite stronger macro forces at work in the crypto markets, Fundstrat Farrell also offered a glimmer of hope around Bitcoin's seasonality. Historically, Bitcoin's median returns in October is 28%, with the largest cryptocurrency showing 2 instances of negative Octobers. Granted, the last took place during the 2018 bear market, he added. So, major news for crypto, major news for the crypto market. Let me know in the comments below how you guys feel. Do you guys feel that we could see a complete crumbling of the US dollar and a decoupling of Bitcoin? This is very possible. These are scenarios that can take place in this bear market. Hope you guys are keeping yourself safe out there. Hope you guys are keeping yourself educated out there and making the best decisions for yourselves. So I thank each and every one of you guys. I appreciate every single one of you guys, and I will catch you in the next one.